What's up, everybody? Tom here with another video. Well, guess what? Tesla earnings are out and it wasn't all bad. It was actually not too bad at all. We had beat of expectations, but of course the outlook has been tweaked. And this means that was it a buy the rumor, sell the fact? In some ways, yes. In some ways, no. We'll be talking about the technical analysis today for that and more, including our Apple analysis, S&P 500, Nasdaq, and of course that all-important big bull at the moment, Bitcoin. Lots to cover today, guys. Stay tuned to see more. Okay, well, we're going to open up today's video, and this is the market recap for the markets closed 20th of October 2021 with a little bit of news here. And we're going to start adding this segment in. So if you enjoy this, please remember to subscribe and smash that like button. And of course, we've seen PayPal now consider to purchase Pinterest. It's a big deal. I mean, obviously, a lot of people are going to be skeptical of this. It said PayPal going down and it sent Pinterest going well up. And fascinatingly, they were two of the big technical analysis things that we were looking at this week in terms of breakouts. So one was not so good, down about 4%, being PayPal, and the other one was up huge. We saw 13-14% put on that very, very quickly as PayPal announced that, or at least it looks to be considering paying around $70. So there might even be some ARB there in the future. Is this a good or bad thing? This is going to be something that a lot of people will discuss. I see it actually as a fairly decent positive. Whenever you bring both things together, being a payment company and of course an advertising company, hey, it's a match made in heaven in many ways. And look, Pinterest has had some problems recently, but if it can turn it around, I think it's actually not too bad an idea. Let's move into what was happening across the markets in the S&P 500. Here's a heat map of the large companies. You'll notice PayPal down there, down a little bit. And in general, lackluster day. We had some strong sectors come through like healthcare, utilities, and a few others we'll check out. But the FANG stocks were mediocre. And I think this is what we expected. We did say yesterday that we would expect a bit of a pullback to occur through this session. And we got it in the tech stocks. I still think there's a little bit more here in terms of a healthy little pullback through this bull run. And then the S&P 500, because of some of the sectors, didn't quite come down. So let's now take a look at each one of the markets. As I mentioned, Nasdaq was down marginally, 0.14%, a little bit more in the futures action afterwards. And we had S&P 500 up 0.37, Dow Jones and IWM up through the session. Let's move over to the sectors now and understand what was happening. And could this be a little bit of rotation by the Wall Street into defensive plays? They're obviously moving day two into utilities now, day two into healthcare now. Materials, we always expected to be quite a strong sector with that strong breakout, and same with industrials. But yes, it was a few defensive sectors leading the charge, and more of the, I guess you would say, traditional growth areas, technology, consumer discretionary, semiconductors, actually showing weakness. And this makes sense, again, along in line with everything else that we've seen so far. We have big earnings still coming into the close of the week. We've got AT&T before the open Thursday. Then we've got Snap and Intel and Chipotle into the close. Some big ones there. American Express also happening on Friday. So remember, we're in earnings week. If you're trading a specific stock, make sure to understand where that stock is in relation to its earnings. It can be very important to reading whether there's that buy the rumor, sell the fact kind of event. VIX, or the volatility index for the S&P 500, is sitting around 15.5. We mentioned in the previous video that this is a point where we expect some volatility to probably start to return to the market. And again, that's in line with hitting that minor kind of resistance on the S&P and on the Nasdaq that we'll talk about in a few moments. So VIX, right back at the 15.5. We do expect here to be where it bases. I wouldn't really expect the VIX to be getting the 12s and the 10s in terms of readings just yet at this stage of the bull cycle and this stage of the recovery. Another thing to be watching out for is going to be the US 10-year. So a lot of people have stopped talking about this, but we mentioned in the previous video, the US 10-year blew out, made a new high, and of course has also backed onto that with another breakout session. And this is probably one of the main reasons that we've seen the tech stocks be the ones that are faltering in this market. 0.35% down now as we speak, recording of this video, of the US 100. And this is due to, I believe, the US 10-year breakout and just in general, a little bit of profit taking coming into the close this week. If the market stays at this level, I would expect also Friday to be that little bit of decline, just as swing-based traders, day traders take small profits coming into the weekend on what's been a pretty damn good rally so far. US 10-year expectations haven't really changed. We expect it to go to the 1.7, 1.75. And if it breaks through 1.75, that'll be the shock to the Nasdaq, because at that point, we're going towards, you would think, 1.95, which is where a lot of analysts believe it'll get to. And I tend to agree with them. 1.95% previous resistance here back in 19, November, December. It makes sense. It is a level that you usually would go back into. So why do we believe that the market could be in for a small pullback here? And we've got a green highlighted zone where I would like it to come back to, just in terms of a healthy correction movement. Well, one of the reasons is, in general, markets that bull up usually bull up in quite a few days of succession. They show that strength, and then they do come back down. There is a nature of why that happens. It creates that FOMO effect. Everyone's got to jump in. People start buying calls. People start in retail thinking, okay, cool, the market can never drop, etc., etc. And it's not so much that it's going into another correction period or anything, but it has that 2 steps forward, 1 step back mentality. And then, of course, hopefully moves forward again. If that occurs, this is the right area for it to happen. We talked about this support becoming a resistance zone. Some people will say, but Tom, it broke out today. Remember, this is on the SPY. So that's the exchange traded fund. It isn't on the SPX. So if we look at the SPX line, it's right around where it should be at this point. Ideally, we would get a market pullback to around 44.60. That would be previous resistance. I think there'll be heavy buying around this level from a Wall Street perspective. And if we have a look at the daily, again, it will make sense. Around there, between the 460 and the 420 will be where all the moving averages are, the 20 moving average, the 50 moving average. And part of the reason that you expect this again is look at the gap between price and the 20 EMA, getting quite far away. And in general, that's allowed that pullback to occur back to the 20, which is that mean reversion. That's where a lot of the time the market likes to come back down to after doing a nice move. Another thing, so many gaps. Like, we need to close at least a few of these gaps. Not maybe the one down here, but we have now 4 gaps actually through the sessions. And that means that the futures market has been going bull. It's been opening, holding that session high, and just keeps going up. And some people, again, in the comment section will be like, I'm sure, because I'm seeing it right now, markets never go down, Tom. It only goes up. Bull, 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 bull. The Fed is the best. Well, in this case, yes. I mean, you're right. However, I would still hope that it does that kind of movement, just from a pure perspective of TA and in general. Now, what's happening in the options world? We'll cover some basic options today. As we said, there's certain things that we want to take out of these charts. It's pretty much a whitewash in terms of the way we look at this. It's so convoluted. I mean, are there huge amounts of puts open? Absolutely. Does that mean the market's less likely to go down? In my opinion, yes. When you have so many puts open, it usually means that they don't want to push it too far down. You'll notice that it's really kind of this area here that becomes the interesting zone. You've got the Friday exposure. What is that? Probably about a 448, 445 put. You can go check out Yahoo options if you want to. But in general, there's very, very few calls in comparison to the puts that are getting opened on this side. And that's interesting fact, but nothing much we can take from that. And that's why not every day that chart's going to show us the best kind of positions. Remember, we use our technical analysis first, and we use it more to find key resistance zones that we're looking for in the markets. And that's not really going to help us through the session. So we found out that Tesla has here big earnings, and the big earnings have come out. 880 was where we were targeting. It got just underneath that, which is exactly what you want to be doing. And remember, if you think 880 is the target, are you going to put your take profit at 880? Brr. Absolutely not. That's what a noob does. And I hope that you're not a noob out there. You put your take profit slightly below that, and you do it because everyone's targeting the 880. So remember, the market knows these round numbers. It knows how it trades. And in general, you want to be a little bit more sneaky than that. You want to put your take profit slightly lower. So we've hit the resistance, And in general, we beat expectations with that Tesla earnings. That's good news. Guidance is down, kind of, really reducing that sugar rush of, oh, okay, we're going to be optimistic into the next earnings period because they've said, no, we can't do that due to constraints in the supply chain. But guess how I see it? I see it as opportunity more than anything else. If you're a Tesla holder or you're looking at picking up more positions in the future, let's say the market comes back down to the 800 where the 20 moving average is, let's just say it does happen, comes back down to the 20, previous buying off the 20. Is that an opportunity for you? Just because they're saying, oh, we can't ramp now, or we can't give you guidance now, they're not saying they can't do it. And it seems like they were actually more than capable of doing it. And I've told you a few times on this channel, I see people with Teslas everywhere at the moment. Everyone wants one. And many people out in my street, they're getting them or they have ambitions of getting them. It's an amazing thing that we're seeing going on right now. So let alone anything else, once they're able to really fix this supply chain problem, get all their factories on board, that could be, of course, a growth opportunity that people are looking for. So from the technical analysis standpoint, I wouldn't mind to see it come back down to the 20 moving average. If we continue to see ramp on it, what we're looking for here is really going over to the weekly. So we want to go to the weekly and we want to say, okay, where have we closed before on the weekly, being that 880, and where do we need this chart to close above to show us that the strength is still there? And we really need it above that 880 level on the weekly close. I think it really needs to probably slow down here a little bit and consolidate. We got that initial impulse move. I'm incredibly happy with what happened there. I'm sure many of you out there would be. It's holding up very well, only down 0.5% after market, after the earnings. And in general, this is the level that we want to break out from. So we've still got our long-term trend line. We've got our daily 20, which is sitting around that 800, 810, which some people might be looking for. And if we break above, then of course you can't ignore breakouts and you've got to start to say, okay, let's ramp to maybe 1,000 or at least into those high 900s. So the outlook looks good for Tesla at this stage. We're at that technical resistance. Let's see how the market wants to play with it come the Thursday open. Move over to Apple. Apple kept chugging higher here, even though a lot of the FANG stocks were down. Apple was not one of those. 150 still a very important level this week. 149.26. Post-market slightly down as per the rest of the Nasdaq, but overall very strong technicals here. We broke through that 145. We knew that was the real deal. It's going towards that next $5 increment being the 150. Fantastic level there for it. And why is the 150 so important, you might ask? Well, it actually comes down to options a little bit. This strike continues to grow. So what that means is that every day there are retail traders, we have to assume, or at least somebody buying the 150 calls. This is a call wall, and this is where I usually use these types of things. We already know 150 should be a technical resistance, but it also gives us a bit of an expectation for this week to where we think there might be good take profit zones, or where we think that maybe the resistance might be found on Apple in terms of there'll be some sellers there. And that's around that 150. So you'll notice the proportion of calls here compared to the puts is massive. And that, again, it means that if we have 70% of options expiring mostly worthless, this is a good level for them to kind of make sure that, okay, well, we don't want to push it any further than that this week. And we'll talk more about this in future videos, but at this stage, that's one of the ways I look at it. Let's go over to QQQ now. Talk about the Nasdaq. Yes, the Nasdaq is still showing a lot of strength. Yes, we're still using our ascending channel. Nothing has changed here. In terms of pullbacks, I still would love to see this thing get back down into, I guess, more relatable area. So I'm looking around that 368 on the QQQ, but it's easier to just use the Nasdaq here from a percentage perspective and also a point perspective. About 15,100, 15,000 would be a great pullback. 2050 cross, obviously to the upside here. And in general, this would be kind of the zone that would be those 2 steps forward, 1 step back, about a 50% fib pullback off that last move. Fill a lot of gaps that are over here on the left-hand side, and then we resume the uptrend into the earnings. A few people are going to say, but Tom, that can't happen until we get earnings of the FANG stocks and then we'll get the pullback. Look, yes, the thing is we are going into earnings. Generally, optimism is there unless we see the first tech stock maybe not hit, and then when that comes out, the first big tech stock doesn't hit, it comes down, it pulls the rest of the market down, US 10-year spikes at the same time. All these things are theoretically possible, but I'm liking this area should it come back down there. And I think you've got to be on the optimistic side here on the markets. Even if you've been a bear recently and you say, oh, we didn't get a correction, I'll argue with you there all day. We did get a correction. It's 8.41%. Most corrections are between 8 and 12% on the Nasdaq, and you should always expect that. And on the S&P 500, you're going around a 6 to 10. And if you get these types of corrections, this is all you get. In most years, that's all you get. You don't always get a 15% pullback or a 20% pullback or anything like that. These are standardized pullbacks that you get over time. And I've done a lot of research on it. So don't expect that pullbacks are going to be massive. I'll probably show you a stat. I might get someone to create it in the community and see if they want to do it. And overall, you will find that most pullbacks are around this size. So be optimistic on markets whenever possible. And to think about crashes, they happen once every very few years. So remember, it's mostly corrections and you need to know your percentages there. At this stage, our expectations for the future growth, of course, of the Nasdaq are going to be this top end of the channel. And you'll notice that's where we're looking. So basically, as we hit this top end, we'll be pretty much changing to, okay, let's see if we get some sell-off here. And that will be where I think a lot of Wall Street positions will start scaling out and looking to attack the aggressive FOMO that I'm sure will be coming into the retail crowd at the same time. Let's move over to Bitcoin because the story of the day is really in crypto here. Crypto just went ballistic. We got almost 67,000 here on Bitcoin. I think the high actually was 67,000 to the dollar on this particular exchange. Phenomenal moves here out of the coin market. And in general, this has led to some really big gains. I didn't expect it to smash this resistance straight away. I thought it might consolidate for a little bit longer. But guess what? Very, very strong stuff. I think you want to look at seasonal studies now. What we saw last time in terms of 17, because it is kind of similar just with the deeper pullback, is that we had this ramp into the back of October, then we pulled back early November, and then we ramped, of course, through the rest of November to December. Will we see that again? Let me know in the comments down below what you think about that. Do you think that we're going to get that ramp very similar to 17 again, or is it just going to keep going up and up and up? 90,000 to 100,000 is looking more possible by the day on this Bitcoin market. Ethereum also breaking past the 4,000 high here. Very strong numbers coming out from Ethereum. Look at this, straight through. Many traders will be getting on board that one. And it looks inevitable that it's going to go try to test that 4,400, 4,500. Very strong, aggressive technicals. Obviously risky, like any of these markets are. But this is also starting to push certain things like the Cardanos. The ADAs are starting to break out of some of their downtrends. We're looking for that 232 plus here to really show us strength. And some people will be getting excited once it breaks past this high over here, which is about 225. So the life is coming back into the crypto market across the board. We are seeing slight pullbacks here in the Nasdaq. And we, of course, have held as best we can for Tesla. It was a bit of a buy the rumor, sell the fact if you hit the perfect technical. But in general, it held up due to beating expectations. But the guidance is, of course, the question. I think it's all possible that this is positive for the markets. And overall, things are looking pretty damn good at the moment. Thanks so much for watching. If you enjoyed the video, please remember to subscribe. Smash that like button, guys. And we'll see you in the next one. Bye for now.